afternoon, Outliers. Happy Thursday. Hope you're having a fantastic week. I'd like to apologize for my absence yesterday. So yesterday was my my mother-in-law's 1-year anniversary of her passing, and in our family we celebrate Dia de los Muertos. I got my shirt on for it. And one of the things that we did yesterday was we went graveside with her for the day. I mean, it was actually quite nice. We took some cervezas out there. We had a little fiesta. I mean, we were out there for probably 6 hours, just hanging out, shooting the breeze, playing with the kids, having fun. So that's where I was yesterday. But you know what? We had a good old time. It wasn't anything sad. It was nice to just be there with family and hanging out like that. So good to be back in the saddle, I guess you could say. Good to see you, David. Michael's here. Peter, Sebastian, thank you very much. I actually studied abroad in Mexico City in 2006, and my family's always celebrated Dia de los Muertos, so it's just the thing we do. I'm Texican is what I like to say. So the plan is, where am I going with this? Mahesh and Mark and we had a meeting this morning. The OVTLYR 3.0 platform looks crazy. I am so stoked about it. Hey Tug, hey Donna. Let me show you what I mean by I don't have a mock-up for it yet. Mahesh was just showing us some screenshots that they put together with the developers, and I was like, whoa, Mahesh, this looks awesome. One of the things that I was really stoked about was he was talking about the news function that is going to be available. So basically you can click on any stock, right? So let's just, for example, let's click into BYON. So you come on to BYON's page, and a few things would be moved around, of course, but some really cool things would be showing up here as well. So the price trajectory oscillator, the blue line back here, that's one of the areas that everyone gets confused on. It's not a moving average. This is actually a super important indicator. It's going to be moved down into its own, in fact, let me draw on here real quick. It's going to be moved down into its own little chart area down here. And so that'll be easier to see versus being on the price chart there. Then also, this was so cool to me. The sector information, right? You go to the market breadth, that's going to move. So when you go to the sectors, the market breadth will be there alongside all the buy and sell signals, the heat map chart, the price trajectory oscillator. So the market breadth will be right here. And rather than having a separate market breadth area like this, all of these charts will be built into the individual sectors. And then, super cool to me, you'll have the breadth information on the individual stocks page, right? So I'll have the discretionary breadth information down here. Let's do a little mock-up here. It'll look like this. If I take this and then I put it right here, it would look something like this. So I'm really stoked about that because that's going to save me a lot of time. I think that's going to be ultra handy. But the news function, in my opinion, is going to be outrageous. So over on the right hand side, it's going to look a lot like my TrendSpider does with different quadrants. And there's going to be a news function like we have down here for TrendSpider. But it's going to have all the news for that particular stock. It's going to have all the impactful news for the different sector, whatever the case is. And then there's going to be a whole news area, right? If you are a news junkie, you are going to love what's coming. I am so excited about this. As you know, I don't trade around news. I don't mind looking at news. I don't mind reading news, but I don't trade around it. But you might, and there's probably tons of people who do. So that is really cool to me. I don't have a good mock-up for what that's going to be, but it's going to be a real time saver. Like Tug is saying, hey, thanks, Cam. So yeah, I'm super stoked about this, and Mahesh is pushing hard. The big announcement that I've been teasing for a while is slated to be at the end of the month. And so Mahesh is trying to time the 3.0 release with the big announcement, so they all go out at the same time, which I'm excited about. So it's going to be crazy. It's going to be it's going to be a hellacious month for all of us. That's for sure. Hey, Jean-Louis, good to see you. But is there anything else I wanted to cover? There is. So Mark has put out a challenge. So Mark asked me to start looking at this. And I said, you know what would be really cool is if we did it together in the trading room. So one thing I want to do with you when I'm not trading is we want to identify periods where there actually would have been a crazy great return during sell signals. Now, this is a decent example right here. Right. So this buy signal came and it worked, or it was kind of flat for a while, and then it took off, right? It went from about $19 here to $31 there. That's a huge move. But also, right, during the sell signal here, there might have been a move to take. There might have been a signal to take maybe here, right, to get that. Or there might have been a signal somewhere in this range here, where it was a great signal from $21. It hit a high of $28 right there. And the sell signal came at 25. At some point in this time, you could have got in a little earlier. So what Mark asked me to do, and we're going to start doing, not today, but in the near future, is looking at the results on here and just trying to come up with something like, hey, all right, so we got the sell signal here. Heat map shows R4. At what point in time do we really see the trend changing, right? And Mahesh was like, Chris, go check out, add some moving averages onto it and things like that, because like we're trying to make the signals better, is what we're saying. And Mark has been very attuned to what we're doing in the trading room. And he's like, look, if we can make these signals better, let's do it. And so that's what we're going to do. And he also said, if you really watch the charts, you can time you can front run the signals. You can actually get ahead of the signals. This is a really good example here, right? So for example, if you're looking at the heat map, let's see, it went from R2, R3, R4, R5, R4. So the heat map started to reverse on this candle right here. And then you can see the oscillator, the price trajectory oscillator, the blue line started going up as well. And so if you had found that, it would have been 2 days earlier, right? Not a big move earlier, but still it would have been earlier. So that's what Mark's asked us to do, is take a look at the data that we have and see what we can find, right? Now, I'm a junkie for this. I can do this all day, all night, because I enjoy this a lot. So I'll be doing this in the trading room with you when we're not trading anything. It's going to be really cool, right? And you may find something special. Like you legitimately, Wes or Michael or Dave or anyone else, you might actually find something really cool. So we're stoked about this. This may go back to the discussion that you and I had a month ago. That might be part of the key to that. Maybe so. Exactly. But we're trying to find those confluences, right? We're trying to find those correlations. So I'm excited about it. I think it'll be a lot of fun. One other thing that Mahesh is going to have for the 3.0 is we will have moving averages on here, which I am really, really stoked about. The mock-up he had up here, it had like 5 EMA, 10 EMA, 20, 50, and you could just tick off which ones you want to see. So that'll be nice as well. Michael says, what's the status on adding more symbols to the library? I don't know. Actually, Michael, ask that in the Discord, because Mark and Mahesh will be able to answer you easier than that. I'm just the guy who trades it. I don't actually design it. So with all that out of the way, let's jump into our market analysis. All right, welcome to the OVTLYR trading room. This is smart trading made simple. This is where we save time, make money, start winning with less risk together as a team. And for those of you who don't know me, I'm your rich Uncle Chris. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR. And I call it the golden ticket trading strategy. Ooh, Jean-Louis, I'm excited you asked about order blocks. Order blocks are very probably coming into into OVTLYR soon. Oh, there's Mark right there. Order blocks. Once I showed Mahesh and Mark just how impactful order blocks are, Mark has basically, his quote was, "I've been looking for a challenge. Let me see if I can take this on." So I think this will be really cool. And it may even be built into the signals. I'm not promising that, but like, for example, if there's an order block coming, right, maybe skipping the buy on that one until it passes the order block or something like that. But yeah, order blocks is a very, very, very good chance that they could be coming. Mark says, Mahesh has been quietly adding symbols with updates for a while now. Ooh, I didn't know that. Yeah, we're trying to make this better all day, every day. Okay, let's get back to this. So real quick, how does OVTLYR work? It's a 4-step process. Number 1, OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. Number 2, OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. Number 3, OVTLYR gives buy and sell signals when these irrational behaviors reach an extreme. And number 4, allowing you to get into the stock before the OVTLYR move happens. Now, real quick, today's member highlight. Ain't nobody chatting on Discord. Not a whole lot. I did see Max notice that there weren't going to be any setups today. Yorn, I appreciate the nice sentiment there. Sebastian was checking out the different sectors, but not a whole lot going on in the Discord. Always remember, we are here for you, right? Be sure you share your stories in the Discord. Let us know how you're using OVTLYR. In fact, tomorrow is Friday, which means I will be drawing the weekly winner circle. So not a single soul has added anything to the weekly winner circle this week, but I get it. I haven't been trading either. But if you have been, let us know if you've been using OVTLYR in what way or another. Mark says, I don't know about soon with order blocks, but R&D is underway. Yeah, isn't that exciting? I'm very, very stoked about that. So don't forget, the first rule of OVTLYR is you tell everyone about OVTLYR and you hit the like button, which tells YouTube to tell people about it as well. And it's free. So let's take a look at the market. We want to see the 10 over the 20, price over the 50, which we do have, right? The market's still pushing higher, looking strong. Yesterday hit a new all-time high, but all the market sectors and all the market breadth is waning. Now, this is actually something I mentioned in the Discord because Sebastian noticed all the sectors are bearish. And I said, yeah, a bearish sector breadth plus bullish price trend equals a weak trend, which is why I'm holding out. Now, what do we mean by this breadth is getting bearish? This is the number of stocks that are getting buy signals versus the number of stocks that are getting sell signals. Give that just a moment to load. You can see here, we only got 10 new stocks on the bull list today, only 10 new buy signals where we have 44 new sell signals. So this is definitely a decently weak trend right here. I'm not fighting it. I don't have any FOMO. I don't want you to have any FOMO either, right? Because one thing I've noticed is that lately we've been given windows, about 2-week windows where we can make money, and we have been, right? There's no reason to get busy. There's no reason to fight. There's no reason to throw your trading plan out the window when you're making money, when it all lines up. So for me, I got the SPY signal shows bullish, although we did get a sell signal on the Qs 2 days ago, and we got a sell signal on the Dow Jones today. So I do think a sell signal is impending on the SPY. In fact, let's go to the SPY and see if we can front run that sell signal. This is what I was just talking about before we jumped into this. If we look at the SPY, oh, look at that. So we do have the, it's easier to see if you zoom out and zoom in. You can see the heat map is definitely getting weaker. Yesterday was G10. I'm sorry, yesterday was G11. Today is G10. And then the price trajectory oscillator, same thing. It's easier to see when you zoom out. Almost looks like it almost might look like it's turning back up. So clearly I don't know what I'm talking about when it comes to front running these signals. But we're all going to look at this together. We're going to figure this out. So I don't have a sell signal yet on the SPY, but it's very likely it could be coming here in the next few days. But it might not either, right? But in the meantime, since I'm not going to be trading, I wanted to jump into several things. I wanted to cover rolling trades. I wanted to cover what I do at expiration. And I want to cover leading into earnings. And when I cover all of this, this is going to have been every single topic through the trading plan. Actually, it'd be better if I did this. That'll cover every single one of these pieces through the trading plan that we've done. And then we'll drop that in the VIP Investors Toolkit so you can go back and research each one if you want to. But let's talk about rolling trades. So I actually prepared for this one. Normally I go by the seat of my pants, but I prepared for this one. So first thing we need to understand when we're rolling trades is, what is delta? So every option has what's called Greeks, and Greeks are the mathematical underpinnings, the mathematical ways that the option price is calculated. Now, one time I was in the office and this guy who so full of himself was like, "Hey, if you think you're so smart with trading options, why don't you tell me the Black-Scholes option pricing formula?" And I'll never forget, because I didn't like this guy, and the fact that he tried to intimidate me or make me feel dumb because I didn't know it off the top of my head. I shot back at him and I said, "You know what? I don't know what it is off the top of my head, and I don't need to know, but I do know how it makes money, and that's what I care about. And that's what I want you to know about, okay? Doesn't matter what the Black-Scholes options pricing formula is. You just need to know how to make money with it, okay? Don't let anybody try and talk you out of that." So we're going to look at SPY, and this is the area, at least on Tastyworks, where you can change different things, right? You've got delta, theta, gamma, vega, open interest, volume, intrinsic, extrinsic, theoretical, etc. The only one that I care about is delta. Now, theta, we talked about just yesterday, where or the day before, is that your extrinsic value always goes to 0. Always. Now, if your extrinsic value always goes to 0, you want to minimize that, okay? And a lot of that is with theta. And if you're buying something out of the money or buying something in the money, either one is going to be depreciating by the amount of the theta each day, the time decay each day. And I would rather buy something that has 20% or less of time decay versus 100% of time decay. Just saying. And Tug, well said, outliers cannot be intimidated. No, why would we? We're the ones making money. Ha ha ha. So back to this. Let's go to delta. Now, like I say, delta is one of the option Greeks, and you don't have to know all the details of it, but what does it mean to you? The delta is the dollar change for every $1 change in the stock. So a 20 delta means a 20-cent change as the price of the stock goes up by $1. And 80 delta means an 80-cent change for every $1 change in the stock price. So let's go to example. So here, a 49 delta means that as SPY goes from 575.50 up to 576.50, this option will go up by 50 cents. So the price of the stock goes up by $1, my option goes up by 50 cents. And if we go to the 80 delta here, this says, as the price of SPY goes up by $1, my option will go up by 80 cents. And then you could go to the 20 delta. If the price of the stock goes up by $1, the price of my option goes up by 20 cents. Okay, that's what delta means. Now, some people look at it as in the money, out of the money. So one way to look at it is at expiration, your 20 delta option has a 20% chance of being in the money, of being profitable at expiration. I don't look at it that way. I don't really care about it that way because I'm only focusing on how deep in the money can I get and pay as little as possible for that extrinsic value, because I want as much leverage as I can with as little cost associated with it as I can. Some people use it like that. I don't. If you sell options, that's something you may be interested in. I did that in a previous life, and I would never do it again in this life. Just saying. So we've understood. We've expressed what the delta is and why it matters. If you have a question, please let me know in the chat. I can't see when you raise your hand, so it would be great if you would interrupt me by putting your questions in the chat. I would appreciate that. So, for example, let's say I bought a 90 strike call. Okay, let's say I bought the 90 strike call, and it had an 80 delta. Okay, and the stock is trading at 100 right now. So we're $10 in the money with that. And let's say I paid $3 for it. And let's say the stock goes up to 105. So if I paid $3 for the option, the stock goes up to 105, the option price now is worth $7 because I'm going to get 80% of that $5, right? So 80 delta call means $5 times 0.8. And that's $3. Chris doesn't understand math, obviously. I'm looking at this and I had a total typo. Option price goes from $3, adds $3, and is now $6. There we go. That makes sense. If anybody's not following, just let me know in the chat. But now my option is at the 90 delta. So, for example, we bought this option. It went up $10. And now I have a 90 delta option. Okay. It's moved in the direction that I want to see. And as it goes more into the money, my delta grows. As it goes more into the money, my delta grows. As it goes out of the money, my delta shrinks. Okay. So if I bought this option and it goes deeper in the money, which is what I want, my 80 delta now theoretically goes up to a 90. So it works more for you when you're right and less for you when you're wrong. Meaning it's getting more profitable as it goes deep into the money because it's going up, right? From 80 cents on the dollar to 90 cents on the dollar. And when it goes the other direction, it's actually working against you less, right? From 80 down to like 68 or whatever. So you're losing less money as it goes toward at the money, while you're gaining more money while it goes deeper in the money. So the delta is pretty awesome for you. Now, when we roll the trade, okay, this is my slide for this. And I only do this when it moves one ATR in our direction. We're at one standard, not standard, standard deviation, one average true range in our direction. So if we look at SPY as our example, I can find the button to push. There we go. The current SPY ATR is $5.83. So if I get in right here, I add 583, that gets me to 581.61. So I would hang tight until I got to 581.61, give or take. You know, you can round it if you need to. Once it reaches there, that's when I go into action. Once it reaches up there, that's where I get busy, right? That is where, as Sebastian just noticed, yeah, Leo sent that GIF one day. I was like, that's so funny. Roll up you will. And I told him I would steal him and use that from now on. Yes, roll up you will at that point. But don't do it before then, right? You don't have to. There's no need to. Nothing's actually happened until it moves one ATR. Once it moves one ATR, you're establishing a new range. Can you roll up and out for a credit? This is key. If you can't roll up for a credit, now follow me when I say this. You paid a debit to buy the option, right? That's a fact. You cannot buy an option for a credit. So I'm taking money out of my wallet and I'm buying it, right? Let's see. Pro tip for you, since it's Halloween time. Go to Spirit Halloween and get some of these. These are the most realistic counterfeit $100 bills I've ever seen. And you can get them by the bulk of 10,000 for like $6 or something. These are great. I mean, they are so good. You would think that these are legit. Anyway, they're like 20% big, but other than that, they're right. So let's take a look at Benjamin Franklin here. I paid you for the option, right? Now, if I roll for a debit, that means I'm paying you again for the same option. You don't want to do that. There's no reason to do that. You're actually adding risk to the trade. So don't do that. If you can't roll for a credit, do not roll, period. Hands down, full stop, don't do it. There's no reason to do that, okay? But if you can roll for a credit, things change. If you can roll for a credit, life gets way easier, okay? If you can roll it for a credit, sell to close the original position as one order, right? And you've seen me do this. We do it all the time when things are working great. So let's say I sell to close my 90 delta because I'm already in the 90 delta. And then I'm going to buy to open the 80 delta. Okay. So in this case, that gives me $13 of credit. That's 548 minus 562. That's $14 wide. That's important. Hang on to that for a minute. So in this case, I can take in $13 in credit, which means when I bought the option, remember, I paid for it. Now I'm getting money back. Now I'm getting money back. When I roll for a credit, I now have money back. What can I do with that money? Right? I can keep the trade alive for first, and now I have money to trade with again. I'm taking partial profits right now, and I can reinvest that into something else. So let's say, for example, we roll the 90 strike up to the 95. Remember, our stock has gone from $100 up to 105. Okay, stock goes up to 105. Now I'm rolling my 90 strike up to 95. When I do that, I'm going to take in $4, right? That's awesome. Gimme. Here's a note. You need to know this. You will never be able to roll for more than that spread. So when I mentioned a minute ago, this is $14 wide, and I could take in $13.29 in credit. That I'll never get $14.01. You can't do that. In fact, your broker, I've tried, will say that's wider than the spread. We're not going to execute this trade. You're never going to get more than that. But the closer you can get to it, the better, of course. Now, when I've rolled from the 90 delta up to the 95, my option delta, 90 strike up to the 95 strike, dollar strike, my delta has actually gone down, right? So my delta went from 90 back to 80. Now remember, we bought the 90 strikes. That was an 80 delta at the time. The stock went up $5. We've rolled from the 90 strike up to the 95 strike. And now we're going backward on the deltas. Okay. Jean-Louis says, would you recommend buying more contracts with the credit if the stock goes your way? I used to do that. And in fact, in the Complete Turtle Trader book, that is one thing that they would tell you to do, is when it moves one ATR in your direction, double your size. And then again, and again, and again, until you get to five units. I don't do that anymore. I'll show you exactly why in just a moment. But there was a point in time where I was getting so frustrated because the trades were going in my direction. I was rolling, and yet I was losing money hand over fist because it went my direction and it would reverse. And then the new strike that I just doubled up at would be working against me twice as hard as when I was going up with one and then coming down with two. Does that make sense? Going up with, 10 contracts and coming down with 20 contracts, that hurts a hell of a lot more. So I used to do that. I do not anymore. And I'm going to cover that in just a second here. But very good question. So it keeps the trade alive when you roll, and it gives you back $4 in credit in this example that you can now trade with, right? You've got $4, you've got 4 Benjamins back, and you're like, okay, let's go find a new trade. And yet your existing trade stays on the books. And you absolutely can. I've yet to do it yet this year, but you can roll it up enough times to where your risk in the trade is practically zero. And in theory, you've got a nearly free trade that you could just let it run forever if you choose to. So rolling is really cool. Now it gets even better. Remember, we started at the 80 delta, okay? The 90 strike was the 80 delta. The stock went up, and our delta also went up to 90, and then we rolled back down to the 80 delta. If the stock turns around, Jean-Louis, this is what I was getting at here. If the stock turns around and goes from 105 back to 100, right? Let's say it round trips, goes from 100 up to 105, you rolled, and it's back down to 100. We actually lose less than if we had just held the original position. What? We lose less than if we had held the original position. Because first, we're taking partial profits now, right? If I bought it for 400 and it goes up and I take 300 in credit in, I think I got that backwards. I bought it for $3. It went up to 7. I've rolled. I got $4 in credit back in my hands, right? My amount of risk just decreased by the amount of credit that I took in. So when it comes back down, I no longer have the entire trade at risk. I may have 50% of it. I may have 30% of it. I may have 30% of my original trade in cash at risk at this point, which that's really cool, right? So we lose less by rolling. So the $5 move down from 105 back to 100 on the original 90 strike would be a loss of 450. But by roll, okay, 90 call strike. In fact, let me add a couple notes here. 90 call strike would be a loss of 450 because it had a delta of 90 at that time, okay? Because it had a delta of 90 at the time. Now, when I rolled it up from 90 to 95 strike, and I then went from a 90 delta to an 80 delta, our loss is only $4, right? It's still the same $5 move on the stock, okay? Still $5 move on the stock, but my deltas were smaller, so my loss is smaller. My loss is smaller, and I've already taken partial profits. So we lose less, a lot less, by doing that. Peter says, if in the future you watch this video and it's got 10,000 views, it was me. Very good. I'm glad. I'm glad that it's worth that to you, my friend. Okay, so let's talk more through this, right? One of Minervini, he's one of my mentors. Had incredible opportunity to work with him. In fact, dude lives near Myrtle Beach. I need to text him and see how he's doing with the hurricane. It's been crazy lately. But one of his number 5 rules: never let a good sized gain turn into a loss. This is how you do that. Rolling your option does exactly this for you. It lets you keep that gain. It lets you take those partial profits. It lets you keep the trade alive, which you cannot do with stocks. And when things turn around, which happens, right? We can't always say it's going to go up, but if they do turn around, you lose less. So let's look at a few real examples that we did this year. Real examples with real money. Let's go to AEM first. AEM. Now, I didn't keep my notes on all of them, but I did on this one. So AEM. In early July, it went from roughly $65 or so, and then jumped up, and we got our buy signal in OVTLYR on July 10th. Right there. That was the buy signal, okay? And that's the trade that I took. Over the course of a handful of days, stock went from 73.08, where I got in. It bounced up. We rolled. We tried to roll a second time, but I remember we were out of liquidity. So let's just put this up here somewhere. So we couldn't actually roll it a second time, but we did in spirit. And by doing so, we raised our half ATR. Our half ATR stop loss point, I moved from way down here up to up here when it crossed at this point here. And I moved it again when it crossed over the second ATR, okay? And then it reached that point on that half ATR on July 18th. So I held it from July 10th to July 18th. July 19th, it round tripped. July 19th, they went all the way back up, all the way down. Let me show you what I mean. It went all the way back up and all the way back down. And then it did it again. And then it did it again, right? Now, if you own stock, you probably would have been frustrated because really nothing's going on. But if you rolled your options, right, you locked in gains, right? I locked in gains right there. And then here I rolled it up in spirit. Like I say, it didn't have the liquidity to roll it again, but that's okay. I still did it in spirit by raising my, let me change colors here. By raising my half ATR stop from down here to here and then to here. So then I got out. And then it round tripped, right? It doesn't always happen, clearly. Of course it doesn't. But by being defensive and offensive at the same time, by rolling the options, we're out. We're done. We're moved on from the trade where other people are frustrated during this move. Okay. Let's do another one. BAC. Now, I will tell you, we were looked down upon very favorably from the trading gods because I had not planned to hold into earnings. That was zero my intentions, but I was able to, right? I was able to make money on it. It just worked out for me. BAC got in. It went up. We rolled. I got out here. I believe that was my note. And then it round tripped again. It round tripped again. So we're able to get our profits. We're able to roll it up. And as soon as it starts turning around, right? As soon as it starts turning around, you've already got the reasoning to get out of the trade. Because you know there's a lot of people who sat there and took that entire round trip. There's a lot of people. This is such a great example. There's a lot of people in GameStop who took the round trips. There's a lot of people in AMC who took the round trips. Oh my gosh, these reverse splits are awful. And you don't have to do that. You don't. There's no reason to. Let's go to the next one. NEM. Again. Got in. It moved up. I rolled here. I moved up my half ATR stop. Came back down. I got out. It round tripped even lower. This round trip right here, it sucks, of course. Now the outlier signal is right because I mean it obviously went on. But in the short term, these round trips, you don't have to trade along with them. Like you actually don't. You can get out and you can take partial profits all the way up. And then when it turns around, you can say, okay, that's it, I'm out. So you sell to close the original position, buy closer to the money, same liquidity standards we always talk about. But the key that I was trying to get across there is you move your half ATR stop to that point, right? Wherever you rolled it, move your half ATR down from there. Okay? And you don't have to round trip anything. So the pros of rolling is you take partial profits now. It keeps the trade alive, right? You actually can stay in the trade. You cannot do that with option or with stock. The only way to do that's with options. It frees up new capital. You can now get back to trading something else, and you keep that first trade on. It lessens the impact of when the stock turns around, which we just saw 3 examples of that. And it can make a trade profitable when it would have been a loser elsewise, right? You can have it round trip all the way back up and down. And if you hadn't rolled, that original position may be at a loss, where your rolled up point may still be at a winner. But there is one con. You make a tiny bit less than if you had not rolled it, right? Because if we're rolling it down, or I'm sorry, if we're rolling down the delta, so like from 90, let's say if we're rolling down from the 90 delta to the 80 delta, you're right. If it continues on up, you're going to make a little bit less. You might make 10% less than you would overall. But you're still locking up that capital, right? You're still not taking any partial profits. You're still at the mercy of the market coming back against you, right? Everything that's a positive of rolling, you have that can be a negative by holding the original trade. And in my opinion, the pros of that outweigh the cons hellaciously. So much so. So that's why I look to roll. That's how I roll. And that's what the point of rolling is to do, right? It is an offensive and defensive move at the same time. Now, let's go to this slide here. So 1 week before expiration, all options will expire. That is the function of an option, right? It's basically a coupon that says, hey, I want to buy this stock at this price, and I've got up to this date to decide if I want to do that. We don't actually do it that way, right? Because you can make tons of money elsewise, getting in and out. But in theory, if you really wanted to buy the stock, you could do that. But like I say, once we see an expiration point coming up, you need to ask yourself this first question. It's paramount to everything. Are you already profitable in the trade, right? If it's going to expire on Friday, are you already up money? If no, you should just close it now. There's no sense, right? The move isn't gonna happen for you. Just take your money off the table. Take the risk off the table. Just move on. If yes, first question is, can you roll up and out for a credit? So we just talked about rolling up. You can roll up in duration as well. Now, if you roll same strike, most likely you're going to pay a debit. Let's go to one that has less options for simplicity's sake. Let's go to J&J. Let's go to Johnson & Johnson. Let's go to Coke. Coke is my default boring stock. But still a million options on here. Okay, hang on. I want to do 10 strikes. 12 strikes is fine. Normally, when you roll out, right? Let's say I have something, it expires next Friday, and I am profitable, but I want to keep it on, right? It seems like everything's working. I just need to give it a few more days to work out. If you cannot roll it for a credit, don't roll it. Okay, so what do I mean? Let's say I bought the 70s. I need to now sell them, right? So we're going to change that to sell. And then I want to buy the future 70s. Well, I'm still going to pay $1.03, right? I'm now paying $1 to keep that trade alive. That doesn't work for me. No, thank you. But let's say I'm rolling up from the 67s to the 70s. Now I'm taking in a credit. Now I'm rolling up and out. Up meaning closer to the money. Out meaning out in duration. So we're going from October to November, and I can take a credit. When I take a credit, remember, you're reducing your risk in the trade. It is a fact. You paid a debit to get in. You're taking a credit right now. You keep the trade alive, and you have less exposure. Okay? That's important. But if you can't roll up and out for a credit, close now. And then, of course, this one order, sell to close and buy closer to the money, same liquidity standards. And again, it can take partial profits now, keeps the capital alive, and keeps the trade, frees up capital and keeps the trade alive. So that's how I look at it. But number one above all, if I'm not already profitable, I don't need to roll. Just a fact. It's not working out. Move on, Joe. Well, that'd be great too. Joe Biden and Kamala can hit the dust. Leading into earnings. All right. Now, we talked about rolling at ATRs. We talked about expirations. Leading into earnings. This is what I should have done. I had a trading error in Bank of America and BAC, but it worked out. Right. I'll be the first to tell you, I had 100% all luck on that one. Because I didn't know earnings were happening on that day. I believe it was Leo who mentioned it during the trading room that there was earnings, and it was too late for me to close it. It was after the bell. And it's too late for me to open this again, apparently. TrendSpider has died. Yep, it's dead. Okay. So the question you've got to ask yourself when you're going into a trade, into earnings, like I'm just talking about, same question we did before. Am I already profitable? Am I already making money on the trade? If no, I need to close it. But if yes, does the expected move break the trend line I'm following? I'm always following the 10. You might follow a different one, but that's my criteria is the 10 EMA. So what in the world is the expected move, and how do I calculate that? It's not that hard, actually. Not that hard at all. Looked like Mahesh booted me. So that's what I was saying. If you're running up into earnings and you're already profitable, yeah, let's go to the next step here. Does it break the trend line? Well, let's go to BAC and let's calculate this together. The way that you do the expected move is really simple. let's say earnings are happening on October 19th. You go to the strike closest to the expiration that has the earnings. Okay. If you do it before, it doesn't necessarily do anything. If you do it after, the earnings will be included within that. Okay. So for example, if earnings were on October 15th, they would be included in this cycle. Okay. Because it expires on October 18th. Now, the way you do this is you go at the money. So 30 close price on this is $39.97. So I'll go with the 40 strikes. You would buy the call and buy the put, okay, at the money. And this is going to give you a number. This is an at the money straddle. That's what that's called. Don't ever trade these. And that says that if you want to buy this trade, it'll cost you $2.03. The expected move is 85% of that. I believe 85% is one standard deviation. So you take the 203 times 0.85 and you get $1.72. Now this is $1.72 up or $1.72 down. That's your expected move. In fact, that's your expected move anytime you want. Until October 18th, it's saying that there is a $1.72 of expected move between now and then. So if we go to BAC and we go to right now, we could say there's a $1.72 up. Oh, there's earnings coming up in just the same number of days. $1.72 up or $1.72 down. That's your expected move, which is pretty huge on this stock because the ATR is only 71 cents. The expected move is more than 2 ATR. That's a big expected move. Now, looking at this, my criteria is, does that expected move break my trend line I'm following, the 10 EMA? We don't need to look at my settings. Does it break the 10 EMA? Close that, but there we go. Well, yeah, clearly it does. Right? The 10 EMA is like 10 cents off of this, 20 cents off of this. And this is like stupid down. And this is stupid up. Yeah, it's definitely going to break the expected move. So if it is going to break your expected move, go ahead and close. But if not, then that is the only criterias I will allow to hold through earnings. If it doesn't fit that, close before earnings. Earnings are risky. You know that. I know that, right? Earnings are something that nobody can expect. You can have blowout numbers and the stock can drop. You could have the worst report ever, and for some reason, the next day it shoots up, right? There's no way to predict earnings. It is a crapshoot. It is a gamble. And if you trade around it, you need to at least bot yourself some room. You need to have at least given yourself some profit cushion. So if you don't have that profit cushion, you're just asking for losses. But if you have that profit cushion and it's not expected to break your trend line, then you know what? Mathematically speaking, seems like you got something working for you. So that's what I want to cover today. I know it was a lot. I know we went kind of long, but I wanted to really break down rolling trades. I wanted to break down expirations, and I wanted to talk about earnings and what that does, or how I would trade around those. So if you have any questions, reach out to us in the Discord. Don't forget, the first rule of OVTLYR is you tell everybody about OVTLYR. And I'll see you right back here tomorrow on Friday. Have a great afternoon, and we'll talk soon.